Hello and welcome. My name is Andy Gershman. I will be hosting our webinar today. First of all, I want to thank you for joining us on this webinar where we will be discussing the recently passed CARES Act. The focus today will be on the impact of this act on small businesses, and we will not be covering anything on how this act is affecting individuals. There will be another meeting in the next week or two, also brought to you by 21st Century Financial, covering that topic again on individuals. Today, I am very proud to introduce Tom Wolf. He is a CPA with Brady Ware, a Columbus or a local CPA firm here in Columbus. He joined Brady Ware in 2010 after spending over 11 years with two regional public accounting firms. He has experience in audit, review, and compilation services, as well as a wide range of corporate accounting and other general business consulting. Tom has also served as a controller with duties that included payroll, employee benefits administration, accounts payable, accounts receivable, sales tax, and daily bank reconciliations. Tom is a member of the American Institute of Certified Public Accountants and the Ohio Society of PPA. It is my pleasure now to bring Tom on the line. Tom, take it away.
Thank you, Andy. I appreciate the opportunity. Welcome to all the folks that are listening in this morning. I want to thank Andy and Rich and the folks at 21st Century Financial for partnering with Brady Ware and myself to do this presentation. There's been a lot moving pieces in this CARES Act since it was enacted back in March a few weeks ago. So we've tried to keep it as updated as possible as things and new guidance has continued to come out as certain questions have been raised. And so try to get you as much of up-to-minute information as we can. And we'll go ahead and get started with the next slide. So we're going to be talking at a pretty high level here with all the, again, the different provisions of the CARES Act. So I just want to have a general disclaimer out there that, you know, every situation is unique. This, for the most part, is going to apply to a lot of small businesses, but we do need you to seek out, you know, legal or professional other accounting advice specific to your situation. If you do have questions, I'll give out my contact information at the end of the presentation if you'd like to discuss offline some of your particular questions and things that may pertain to your business specifically. So we're just going to start, like I said, at a high level, and we can discuss specifics afterwards if you have questions. So just kind of a general outline for what we're going to touch on today. Kind of go in chronological order on kind of how things started here with the relief that came from the federal government. So we're going to talk about the SBA emergency disaster loans. That was kind of the first option available to small businesses. We're going to get into the Paycheck Protection Program, the PPP loans that are hugely popular, and got some up-to-date statistics on that for you. And so then we'll roll into some of the other options that are available to employers, like the deferral of payroll taxes, employee retention credits, and then some other corporate things like business loss deductions, mandated paid leave for employees, student loan payments, net operating losses, interest expense as it relates to the company. Another important piece here was depreciation on qualified improvement property. That was another big relief here for businesses. That was, we'll get into more detail later on that. That was an error in the Tax and Jobs Act that Trump instituted a few years ago. Charitable contributions and a couple other miscellaneous provisions and reminders I just want to keep everyone aware of. So with that, we will go ahead and jump into the emergency disaster loans. So going to the next slide here, the disaster relief loans were kind of the first way that the government and the SBA tried to help out the small businesses. So this was an opportunity for small businesses to apply for these economic injury and disaster loans to basically get up to $2 million of assistance once you could show that you were, impacted, which pretty much every small business has been, with the majority of the states having some sort of stay-at-home order. So these small businesses were able to apply for these loans. And so we saw a lot of activity on that a couple weeks ago. There was no restriction on these loans. Just basically you need to show the need, that you've been impacted by the virus and this economic emergency, which every state has now declared an economic or a state of emergency, excuse me. And you could use these loans for anything, just cash flow issues. So they were set at 3.75%, a maximum 30-year term. So a lot of businesses did apply for these loans. You provided certain information to the SBA, like your revenue over the past couple of years, and they basically determined the amount of loan that they would be willing to advance to you. So there wasn't a set of asking amount. You couldn't, ask for $1 million or $2 million or whatever the number was. You submitted the information, and then the SBA decided based on information how much your loan could be. I will say that if you did apply for this loan prior to March 27th, I think the system crashed that week. That was a pretty busy week with everyone applying for these loans. So we had to kind of resort to the paper route, and now things are a little bit more caught up. They have updated the website, and they are asking that if you did, again, apply for this loan prior to March 27th, if you go back on the new website and fill out the information there. It shouldn't take more than 15, 20 minutes if you've got all the information from when you did the first application, and it gets things moving. You have to provide them with your bank account information and routing information so they can get you the funds once you're approved. And the loan proceeds are dispersed there. So that's just a reminder, if you have done that, you want to get back out there on the website and submit that application online, and things will get moving a little bit faster there. So on to the next slide. So in addition to the disaster relief loans, the SBA did offer these $10,000 emergency economic injury grants that were kind of meant to, help folks out, help small businesses out in the short term, so they could have a little bit of cash flow until their new SBA loan came through. So this is, the guidance just came out recently. This is capped at $1,000 per employee that you had as of the end of January, with a maximum of $10,000. So if you had only 5 employees as a small business, then you would be capped at $5,000. Probably most employees have more than 10, or most companies have more than 10 employees, so you're probably okay there. But this is a grant. It's not required to be repaid. When we get into the PPP loans later on, this will be deducted from the forgiveness amount of your PPP loan, but we'll get to that later. So just a note there, you are able to do the SBA disaster relief loan as well as a $10,000 grant and the PPP loan. So jumping right ahead, like I said, in the next slide, the PPP loan is definitely the most popular. The disaster relief loan, does not have the ability to be forgiven, but that was the first thing that came out. The PPP loan is very attractive to small businesses. It does have the ability to be forgiven, which is huge, and we'll get into those terms shortly here. There was an initial $349 billion. There's been talks of possibly adding another $250 billion to this PPP program. As of last night, when I was watching the press conference that drew a lot of controversy, but I did get some good information out of that from the Secretary of the Treasury. As of yesterday, $230 billion of this fund has been used up, so it's more than halfway gone. So if you haven't applied for the PPP loan, you want to get that started ASAP, and we'll talk about that here in a few minutes. So $230 billion has been dispersed, or has been approved to be dispersed, and 4,600 different banks have been able to help their customers get these funds. So this has been a great godsend for the small businesses, and all things considered, it has moved along pretty quickly. There was a lot of confusion and questions in the first couple weeks of when the PPP loan came out as to certain definitions and things, but it has moved along, I think, all things considered, relatively quickly, and people and small businesses are starting to get those funds, which is huge. So just to go through some of the specifics, the terms are the same for everyone. The banks have a standard agreement for that. The loans can be forgiven. You do have the potential for that entire loan amount that your company is qualified for to be forgiven, but it must be used to cover payroll costs, mortgage interest, rent, and utility costs over the 8-week period. So again, there is talks of possibly extending that 8-week period into 12 weeks. So adding another 4 weeks to use those funds to possibly be forgiven. But nothing is concrete as of right now. So we'll see how things transpire over the next weeks. But another part of that loan forgiveness amount is you do need to maintain employee counts and compensation levels. So payroll costs are capped at $100,000, both for when you're figuring the amount of your loan. When you add in your payroll costs, you can't go over $100,000. So if an employee makes $125,000, $25,000 right there at the beginning is going to come off as part of that loan amount. So you can include $100,000, but nothing more than that. So the good news too is once you're approved, the loan payments won't start for 6 months after the loan is dispersed. So you'll have the time then hopefully get your loan forgiveness figured out and completed, and then 6 months after the loan dispersed is when those payments will start. So a little background on just kind of what the PPP loan means. If we go to the next slide, when can you apply? So starting April 3rd, again, this was a crazy week. We had all the small businesses helping, going to their banks, their SBA banks, and making sure that they were, getting that process started. So April 3rd was a busy week. But if you haven't already, you do want to contact your bank, your local bank where you have a checking or a savings account for the business. And most likely, if they're a decent sized bank, they're going to be able to help you with this process. Starting the week of, starting April 10th, that was a Friday, independent contractors and self-employed individuals could go ahead and apply to receive their PPP loan. So it started with the small businesses first, 1 week later with the independent contractors and self-employed. And again, there's tons of SBA lenders out there. I can give you the website if you need any more information on how to find an approved lender, but chances are even your local bank is going to be able to help you with this loan, so you can reach out to them and get that process started if you haven't already. So on to the next slide. Again, any FDIC institution, your local bank, I know the SBA did help other lenders get approved on a temporary basis to help with this process. Again, with 4,600 banks that have done it nationwide, there probably isn't an issue with finding a bank that can help you with this process. So on to the next slide on who is eligible for these loans. Basically all small businesses with fewer than 500 employees. So I would anticipate most of the folks on this call that are small businesses, we probably have fewer than 500 employees. There are certain ways to, depending on what type of business you are, in certain industries where you have more than 500 employees, that you could still potentially apply for those PPP loans, but we'd have to look at that on an individual basis. But for the most part, 500 employees or fewer, which is the definition of a small company by the SBA. So if you're familiar with the SBA guidelines, typically those are what rule here. On to the next slide, there are some affiliation standards, again, with a normal SBA loan, and a lot of those carried over to the PPP loan. So with franchisees, there can be issues there. And so, again, you have to look at it on a specific basis. And again, guidance continues to come out on this. And the one thing you will need to do at a minimum on the SBA application is you do need to disclose other affiliated businesses where you have a greater than 20% common ownership. So right now, that's nothing more than a disclosure. We haven't seen anything more than that. And a lot of times, if you have small companies that are related to each other, more than one of those companies are going to apply for these PPP loans. So it goes by EIN number and payroll for that specific entity. So you could have 15 different businesses that are each under 500 employees, and you would just need to disclose that common ownership on an affiliation schedule. to attach to your application. So, and again, each EIN number that has payroll would be the one that would start to, will be the one to apply for the PPP loan. So you could have one PPP loan for each of those related businesses. Going on to the next slide. So there is, like I said, a 4-page loan application. Really 2 pages are what needs filled out and signed. And this application process is available all the way through June 30th. Again, I don't think the funds are going to last that long. If you haven't already, you want to get this process started. There could be another $250 billion worth of funds that could be added to the pot, but as of right now, that hasn't happened. So my guess is even if that $250 billion does get added, they're still going to run out, way before this June 30th deadline. But for right now, that is the application deadline. So moving on, what other documents you're going to need with your application? So all in all, this isn't too bad. You do need to, you don't have to go and, try to secure a bank loan or an SBA disaster relief loan. You can do this PPP loans, just by itself. You don't have to exhaust other opportunities. And you can only take one PPP loan at a time. Again, one EIN, one payroll is what is maximum for, for the PPP loan. So that's the limit on that. So on the next slide, like I said, you will need to compile some payroll information. Most commonly, we've been helping our clients with calendar year 2019 payroll information. So Form 940s, 941s to help substantiate what your payroll costs were for that time. Again, you're gonna be limited on the folks that are over $100,000. You can also add in any employee benefits that the company pays for. Again, what the company pays for. So employee benefits as in health insurance, retirement options. If you have employee withholdings that net against those, you want to use the lower amount as to what is out of pocket for the company. You don't want to include any employee withholdings there. That would be incorrect. So your wages, time off, vacation, sick leave, any of those things that go into gross payroll for the employees, plus medical, plus retirement. And you can also, in the state of Ohio, you can also use state unemployment, which is paid for by the employer on your employer taxes. Again, you don't want to include any federal taxes. That's not something that's included in gross compensation, even though the employer pays that. Just any state and local taxes, which in the state of Ohio, I imagine most of the folks on the call here in the state of Ohio, you can include state unemployment taxes as part of your gross compensation and payroll costs. So what can you use these proceeds for once you actually get the loan? So you can use them for those same payroll costs, including benefits, again, up to $100,000 prorated for that 8-week period, which I think would be around $16,666 for that 8-week period. You can use it for interest, not principal, but just interest on mortgage obligations that were incurred and were in agreement. You have a loan agreement that was before February 15th. Any rent under lease agreements that were enforced before February 15th. And as of right now, this does include self-rental. So a lot of small businesses have a real estate company owned by the same owner in a separate entity. As long as there's a lease agreement that's reasonable, you can use that for rent as well, and also utilities. So those are kind of the main uses there as of right now for the proceeds for this loan. So going on to the next slide, the loan, it can be up to $10 million. So once you figure 1 month's worth of your prior either calendar or fiscal year, sometimes you can use a fiscal year, whatever's easiest, wherever you have the 940s and the 941s to back up. But most clients have used a calendar year, 2019, to figure an average month of payroll. So you get 250% of that, or 2.5 months. And that's subject to the $10 million cap. So probably most small businesses are not going to be, that we typically work with, and they're probably on this call, are not going to hit that $10 million cap, but it's basically 2.5 months of an average payroll. And again, making sure to exclude any employees, including owners, that are over $100,000. You want to exclude that amount over $100,000 as part of the payroll costs. So going on to the next slide, very important here, how much of my loan will be forgiven? So that, now that we've seen a lot of PPP loan applications done, we're getting into the questions, and more guidance is coming out on how much of this loan will be forgiven. Right now they're saying that no more than 25% of your loan proceeds can be used for the utilities, the rent, or the mortgage interest. They really want to focus this on keeping payroll. So they want 75% or more of the proceeds from this loan to be used to keep people employed and on payroll and in the companies ready to go back to work once this thing is past us and we can slowly start to get into a more normal lifestyle and get back to work and such. So they want to keep employees employed. So this is what this is meant to do, is keep people on the payroll. A key thing here, because I know I've talked to a few clients already that kind of want to maximize their use of these funds, make sure they get as many payrolls included as possible. That is a good thing to try to work out and make sure you get the timing down correctly. But once you are approved for that loan, the PPP loan, the lender must disperse you the loan no later than 10 calendar days after the approval. So you can't just wait 2 months for it or something like that. So it's got to be dispersed within 10 calendar days. So there's a lot of formulas, and we're working on getting more information out as it comes and more guidance is cleared up. But you're not going to be able to have your loan forgiven 100% if you can't maintain a certain amount of staff based upon your FTEs, based upon what you had on staff in February of 2020. So there's the FTE equivalent is going to factor into that. And also you don't want to get, cut a lot of wages as well. So if we go into the next slide, it'll talk about kind of the things to watch for on the payroll side in terms of figuring how much of your loan will be forgiven. So again, the number of staff as of June 30th is when the new period will be that you have to look and see, okay, have I kept the employees? Have I maintained my FTE count? So that's going to be based upon comparing that June 30th head count to what you had before this crisis. It doesn't have to be the same people. It's all based upon head count. So for the most part, if you haven't decreased wages and you've kept your full-time equivalent head count consistent and you're able to keep it consistent through June 30th and you're able to use the funds on these approved areas, then you should be able to get the majority, if not all, of your loan forgiven. And again, this does not, we'll get into the next slide on what that loan forgiveness means and how that gets recorded. But again, you can't, the 100,000 limit is key as well. So, so at the end of this, you'll do a loan forgiveness calculation. You'll show that your full-time equivalent has remained consistent. You'll certify the documents are true and accurate. And that you've used it for the proper things that are outlined in this. I've recommended to a lot of my clients that if you do get these loan proceeds, it makes sense to maybe set up a separate checking account in your business. That way it's very easy to see the audit trail of what you use those funds for. If you put it in the regular checking account where everything else is, where you pay other things that aren't part of this process, it might be a little bit harder to see that audit trail. So audit trail is going to be key. We've kind of helped clients quickly go through this process of getting the information in, certifying that this information that they used to calculate the PPP loan amount was accurate. And I think really the focus is going to come on, at the end of this process, the loan forgiveness amount and computing the original PPP loan amount. There's going to be a lot of scrutiny on that. There's going to be more time for the SBA and the government to come back and say, okay, we really need to certify and make sure that you used it for the proper things and that your PPP loan was accurate in the first place. So this is going to be huge. And I think that's just an easy way, setting up that separate account to make sure that, you can easily show that audit trail of what you use those funds for. If you don't get your entire loan forgiven, the good news is it's only a 1% interest rate for 2 years. And so it's very cheap money, even if you don't get the whole amount forgiven. So that's one positive there. And beginning from when the loan is dispersed, you do have 6 months of deferrals, but your interest will continue to accrue there. So again, just going over here on the next slide, the loan's got a 2-year amortization. There's no prepayment penalties for that, no collateral required, no personal guarantee. It's really meant to be a quick and easy way to get the funds to these small businesses that need it. So again, on the next slide, talking about the things that you need to certify as part of your application, that you have you've had the effect on your operations from this, which basically every business has. So that's a pretty easy thing to certify that you're going to, retain workers. You're not going to receive any other loans under this program. You have one per federal EIN and payroll. And the lender is going to be the one that, as they enter this information, when you go to your local bank, they're going to take your application, enter it into the system, get the approval. So they have the right to ask questions and things to make sure they understand the information you're giving is accurate. And it's on those banks to make sure that information that they receive is accurate and complete. And so we talked about the no more than 25% for those things outside of payroll. So going on to the next slide, I think I kind of mentioned this already. The lender will make sure that the information is there. You're going to, make sure you're going to basically say in the application that everything's true and accurate. So that's a quick summary of the PPP loans. Again, the most popular thing out there. I'm going to go into a couple other options here on the next slide, going into the deferral of payroll taxes. This is an option for employers also. If for whatever reason you do not do the PPP loan, you do have the option to forego your 6.2% Social Security taxes for a time period where half of them would be paid December 31st, 2021, and the remainder by December 31st, 2022 for the rest of 2020. So you do have that option for deferral. However, you're not going to be able to do that in the PPP loan. Again, I think the PPP loan is going to be the one that's most advantageous for small businesses, but this is out there if for whatever reason you've got the deferral of that cash payment for their Social Security taxes if you don't do the PPP loan. Same thing moving on to the employee retention credit. So this allows for up to 50% of eligible employee wages, qualified wages, so $5,000, figure it that way, based upon the number of eligible employees you have, that you would receive this employee retention credit on your payroll tax filings. We've done a lot of analysis here. It seems like in most cases, even when businesses are closed for this pandemic, that the PPP loan was going to net more payroll, was going to net a bigger loan advance versus this employee retention credit. And it's going to get to you sooner as well. So this employee retention credit would be on the payroll tax filings, which, come at the end of every quarter. Could take a little bit of time. You're waiting for a check from the IRS. So the PPP loan seemed like the most advantageous thing to do, again, because you can't do both. Even based upon the number of employees, if you're paying them a normal wage, it seemed like the PPP loan was going to be the way to go. But this is out there as well. If for whatever reason you're not going to do the PPP loan, then the retention credit is available for those employees. So now we'll move into the next slide, getting into some of the just general, some other things they did to help small businesses in this CARES Act. So previously there was a limit on how much of a business loss you could use on your personal tax return. $250,000 for single filers and $500,000 for joint filers. So that lists the limitation. This CARES Act lists that limitation for 2018, 19, and 20. So that there's some ability there to use those losses both in 2018 if you would like to amend your tax returns, and then 2019 and 2020 if you haven't filed your 2019 return as well. So there's some ability to kind of use up some more losses from previous years that would in the past would have been limited by the previous Trump Tax Act. Moving on to the mandated paid leave. So this they may even discuss in the individual section as well. So this gives employers the ability to help employees take time off when they're either sick from this virus, or they have the need to stay home with someone who is sick, a family member or a dependent, where school is closed and parents have to stay home or they don't have childcare. Moving on to the next slide, you've got some additional time here, some paid time off that has the employers that have the ability to do that. Now you want to make sure with your payroll provider you can track that, and I think most of the payroll providers have set up separate time codes so you can track that and get the credit back on your quarterly payroll filings. So you want to make sure that's in place so you can track that time off, because it is due to this pandemic, and that the employee is required to stay home. either because they're sick or they need to care for someone. So that's those different provisions there and allowing that extra time off to help in those times of crisis. So that's kind of the summary of the paid leave. Jumping forward to another provision here for small businesses. Don't know if this is going to be hugely popular, but small businesses are allowed to help employees with their student loan payments. A lot of employees have the ability, if it's still with the government and not a private institution, to defer their student loan payments. But employers have the option now to make payments on behalf of the employees to help keep their student loans current, up to $5,250 for 2020, and this would be tax-free to the employees. So this is another benefit that employers can use to help employees in these tough times. So that's a quick summary of the student loan process. Again, I don't think this is going to be hugely popular, but it is an option out there for small businesses. Moving forward to the net operating losses. Again, there were the previous guidelines there were limits on how much of net operating losses could be used to offset income in certain tax years. Again, I'm not going to go into terribly a lot of detail here, but it did remove some of those limitations, and so it is worthwhile if you have previous years losses to go back and look at 2018, and if you haven't filed 2019 tax returns, to see if there's the ability to use those prior year net operating losses and offset of those income from prior years to see if there's opportunity there. If you had operating losses in 2018 and 2019, and specifically 2020, moving on to the next slide, in 2020, if you've got a net operating loss, that has the ability to be carried back for 5 years. So 2020 is going to be a tough year for a lot of businesses. If you have a loss that gets generated, you can always carry it forward, but then you also have the ability to go back for a period of 5 years and offset prior year taxable income. So that would be a way for employers to potentially get some cash flow by amending those tax returns and getting some tax refunds back. And again, the 80% of taxable income limitation is available to allow those losses to be offset in 2020 and 2021. Hopefully things get back to normal in 2021, a good year. You've got the ability to 100% reduce that income if you've got losses carried forward from 2020. So some good opportunities there for companies to look both in the past and forward if they do have some losses to get those offset and get some cash flow in the business. So even if those losses weren't related to COVID-19, you can still use those losses going forward and backwards as well. Moving on to the interest expense deduction. This was another big piece of the Trump's Tax Act from a couple years ago. There was limitations for certain companies and businesses on how much interest expense they could use as part of the deduction on their federal tax return. For the most part, that was 30%. It's now been increased to 50% with the CARES Act, which is a big help. Now, there are some adjustments in there that I won't go into here based upon what type of business you are and some other things. So it's important to look at this, and it may not be exactly 50%. There are some things you have to look at in terms of what type of business you are and whether you're a partnership as well. There's some limitations there, but for the most part, you're going to make that interest expense deduction limitation is going to be 50% and not the 30% as it was in the past. Moving on to the depreciation on qualified improvement property. This was a huge win. This was something that the Tax Act from a couple years ago, there was basically something that was missed in there when they finally pushed it through, that made some qualified improvement property, which are some things like, if you do some installation of some drywall, ceiling, some interior redecorating, fire protection, mechanical, electrical, and plumbing, those things were determined to be 39-year property and only and depreciated over 39 years versus 15 years where they had been in the past. And basically, you couldn't take the bonus depreciation on those items, or Section 179. So that was a huge miss on the Tax Act from a couple years ago. And then basically the IRS and the Department of Treasury said we can't do anything until they do something in the legislative area to fix this. And that probably wasn't going to happen anytime soon with the split that they have in the House and the Senate. So this was a nice way, unfortunately, a bad reason to have it with a pandemic, but something that both parties could agree to get in and fix this technical issue that was from the Tax Act from a couple years ago to make those improvements qualify as 15-year property that's eligible for Section 179 and bonus depreciation. So you have two options here. You can go back and amend your 2018 tax return, or you can correct it on a cumulative basis in your 2019 tax return and catch up that depreciation. So really get 2 years worth of depreciation in 2019 if that wasn't used for 2018. You may need to file a Form 3115 with that return for 2019 if you're going to make that election. But I understand that will be an automatic election. The IRS is looking for this to take place with a lot of folks. If you have done a cost segregation study to accelerate depreciation on some of your buildings in the past, if that happened in 2018, that might need to be revisited and can be updated and carve out those pieces that were typically 39-year property before and can now be 15-year property now and subject to this Section 179 and bonus depreciation. So that's a huge windfall and could be that depreciation is a nice thing to get some cash in the pockets of small businesses as well. And then moving on to charitable contributions. The reason I mentioned this, most small businesses are pass-through entities. They're S Corps or LLCs, and so the income from the business gets passed through to their owners. And so now the CARES Act increases the amount of charitable contributions that you can deduct on your tax return up to 50% of your adjusted gross income. So that will help get some more cash in the pockets of the taxpayers and the owners of the small businesses. And then your corporate charitable contributions limitation has been increased as well from 10% to 25% of taxable income. So what's excluded are private foundations and donor advised funds. We probably don't have a ton of applicability here as long as it's 501c3 approved and the company makes those contributions. That's an increase for those deductions, again, to get more tax credits in the hands of the small businesses. And then finally, just a couple other provisions that I just wanted to mention. One other piece of the CARES Act I didn't go into a whole lot of detail here was the alternative minimum tax credits. Most, like I said, small businesses are S Corps and LLCs, so most of those are pass-through entities. The alternative minimum tax credit applies to C corporations, so probably not a ton of applicability here. If you have questions on that, we can certainly help you. But that's one specific item I didn't go into a lot of detail on. And then I think most folks know by now the federal tax filing deadlines have been extended to July 15th, and in the state of Ohio, the Ohio cities as well have been extended to July 15th, as well as the deadline for the quarterly estimate. So that's a huge way to keep cash in the pockets of the companies until that July 15th filing deadline. And then one thing I want to go back and mention too, if you had an SBA loan from 5 years ago as a small business and you have those normal payments that have been occurring, you do have the option and ability to defer those loan payments for up to 6 months. What you need to do is contact your existing SBA lender, whatever bank you have that existing SBA loan with, and talk to them about that. They can help you get that approval process squared away so you can defer those loan payments, and again, to help with cash flow. So then finally, just want to wrap up by saying I appreciate the opportunity to give this presentation with the folks for 21st Century Financial. My contact information is on here. If you do have follow-up questions or items specific to your particular situation, we'd be more than happy to help out. If you want to email me, we'll do our best to get you an answer or at least have a conversation and get you a point in the right direction. So I want to appreciate everyone. I appreciate everyone's time today, and hopefully it was informative, and let me know if you have any questions. Thank you.
Great. That's really good stuff, Tom. We really appreciate really all the work that you and your team there, Brady Ware, have done. That's a lot. I mean, I believe the bill is 800 and 80 pages or something along those lines. So that's a whole lot of information to come through. And again, just want to thank you for the information.
Absolutely. Glad to do it. Thank you.
Good. Just as kind of to wrap this up, again, we had quite a few people on this. You see Tom's email there on the screen, twolf@Brady Ware. You can also email, it's located in the chat, the info@xxiadvisors.com. Either one of those email addresses would be great. We will also be rebroadcasting this to anyone that you know who possibly wasn't able to jump on at this time today. So we will have a copy of this. This webinar has been recorded. So you can, again, drop in an email to one of those two email addresses, and we can actually get you or anyone that you know that could benefit from this information, a copy of this webinar. So again, really in closing, I appreciate everyone for jumping on here. This is certainly a moving target with this CARES Act, and you know, more information is coming out, and not all of the certainly ramifications of this act are going to be known and felt for quite some time. But we appreciate you taking the time. Please continue to be safe, take care of yourselves, take care of your families, and we will be happy to answer and help any way we can.